Hey everyone, I have a big show in store for you because I have two guests. They're some of the greatest voices in the space, Larry Lepard and James Lavish. Welcome to the show, guys.
Thanks, Nat. Nice to be with you, and nice to be with James.
Great to be here with both of you.
Well, this is going to be fun. Lots to talk about because, we can declare victory, right? We softly and gently landed the economy. The Fed has lowered interest rates for the first time in a while, and nothing really broke, right?
Good.
Am I getting this right?
I'll let James take that one. He just wrote an informationist on it.
Well, so let's start at really high level, Natalie, because you know that I like to make sure that people understand what we're talking about, not all in acronyms and everything. So, look, from a very high level, the Fed has they have two mandates, right? They have one is stable pricing. And that means in their terms, basically, they've defined that as a constant 2% inflation. Okay. If it gets above that, they try to bring it down. If it gets below that, they try to bring it up because they want a constant 2% inflation. Why that is, we can get into later. But the second thing they have to do is their second mandate is full employment. What does that mean? There's no real number around that. There's no metric that they can point to, but it just means that they look over a long period of time, like where does it feel like we have full employment in the economy? So what we've seen over the past, I'd say about last 3 to 6 months is inflation has come down. It's kind of leveled out here, in my opinion. It's kind of leveled out at around 2.5 to 3.5%. But then the Fed came out a week and a half ago, and they said, victory, we can start lowering rates and, inflation is not a problem anymore. Now we're focused on the employment numbers and the employment situation because we don't want that to spike up and have a real high unemployment rate, which means that we're heading into a recession. But that's kind of where we're at. And there's a whole lot more to dig into there, but I'll let Larry fill in anything.
Well, yeah, and as you both know, and as we all know, first of all, the inflation numbers are a joke because they're not accurately calculated, and they don't really reflect what we're all paying in terms of inflation. I mean, I had a home where the homeowners insurance went up 100% year over year, and my auto insurance is up 35. I mean, there's just no way that what they're reporting is real. And shadow government stats. John Williams has documented that for years. But being all that as it may, it is arguably lower than it was when it was at 9%. I mean, things are not going up as quickly as they were at the peak of, the pandemic and when they were still printing money excessively. And so, yeah, I mean, they've declared victory, but you've still seen some of the mainstream economists come out, like Krugman, has come out and said, well, they should have a higher target, which is just, absurd. And my view is it's really just a temporary phenomena before the next wave begins. And in fact, something we should go into it. I think what kicked off the next wave happened last week, which was when China came in, and very much like Mario Draghi saying, I'm going to do whatever it takes to save the euro. China said they're going to do whatever it takes to save their economy, and they did. They came full barrel with QE, fiscal stimulus, supporting banks, making direct deposits in banks. I mean, it was really quite stunning. And on that day that they did that, a lot of commodities went limit up. Mm-hmm. I mean, rubber, copper, tin, some of the other widely traded commodities.
The actual cuts weren't that big, but all of the things they did together was right. Like, whoa, there was a lot. It ended up being a bazooka,
Yeah, and the messaging around it was very much of we will do whatever it takes to stimulate our economy and get it going again. So. And if you look at the charts and they're very widely available on Twitter of M2 growth, global M2 growth, particularly, China it's going straight up. So they've got the printers turned on full blast. That has been reflected. I think last week also you had, gold making record highs, mm-hmm. Silver close to breaking out of kind of a 3250 cap that it's been under for quite some time. And then Bitcoin coming nicely off the 58 that we were kind of stuck at, into the low 60s. So, everything today is backing off a little bit, but markets breathe up and down. But the bottom line is that the fiscal situation, as James has so many times laid out, and I've laid out as well, that the debt doom loop that we've got absolutely requires that they continue to print money, because if they don't, the whole thing collapses. Right. And so they take turns. The U.S. does it at one point in time, China does it at another. They all add to the global M2. And so, my view, I think it's James's as well, is that we are going much higher in all of the assets that government can't print.
Coin Stories is proudly brought to you by Bitdeer, a global leader in disruptive technology for Bitcoin mining and AI. As a publicly traded leader, Bitdeer boasts a massive 2.5 gigawatts of electrical capacity and infrastructure under development across 3 continents, positioning Bitdeer as one of the most diversified and power-dense computing companies in the world. Bitdeer's leadership pioneered the original advancements in Bitcoin mining ASICs and is now poised to disrupt the market again with groundbreaking new designs for the next generation of mining ASICs that are targeted to reach efficiencies of as low as 5 joules per terahash by late next year. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. I was assuming that China's stimulus did help Bitcoin in the last week because now we're back in sort of the mid 60s. We're moving away from the 58K gang where some of us were getting comfortable. But I wanted to ask specifically about China. When we think back to the stimulus of the pandemic and when the money printer was really going burr, is it similar, like the amount that they're injecting right now to back in the pandemic? And is this maybe a foreshadowing of what we might have to do, or is it separate?
James, do you have the specific figures? I can't.
No, I don't have the specific figures. No, but what we do know is, but the point that Larry was making is that it's kind of across the board, and China is important. China has a 5% GDP growth rate target. That's higher than ours, and so they want 5% growth rate. And if that means they have to do it through stimulus, they're going to. They are suffering what could be a deep contraction if they don't stimulate. So the amount of that, I think, is going to end up being more. We have to look at the figures, but the reality and going back to the Fed though, Natalie, and what is so important about this is, I mean, look. The U.S. economy is like 25% of G20. I mean, it's a massive amount of the economy, and M2 is really important. But looking at what the Fed is doing and what's important about this and why it's so important that they have kind of declared victory on inflation here, while it's not really tackled yet. So if you go back to what Powell says. Powell has declared over and over again that they look at PCE, okay? And that is the metric that they want to look at is in specifically core PCE, which pulls out food and energy prices. So this is the price of the consumer expenditures in index. And so it's a little bit different than CPI. It's also manipulated. It does use CPI underlying data to calculate it. It's kind of all incestuous. But the important thing here is that Powell in the meeting, in this last update in the press conference in his written notes, his statement, he said we have a peak into inflation. It looks like it's going to come down to 2.2%. Okay, the PC was released. It was 2.2%, but that's not the core PC, which pulls out energy and food, which he keeps pointing to as important because that's a real volatile, food and energy is volatile. Mm-hmm. So if you look at inflation, we're still at the PCE, we're still at 2.7%. We've kind of hovered there. So I don't know if you've seen this chart, Natalie, and I'll see if I can find it so we can put it in the show while we talk about it here. But there's a great chart that shows the inflation rate of 1970s, how it really peaked up. It came to kind of a peak and it came back down and then it ripped higher again.
Yeah.
And if you overlay today's inflation trajectory, it is following the exact same path. It's actually a little bit frightening how closely correlated it is. Now, it's a different metric, so we didn't go as high this time. We only went in the 9%, 9.1% range versus the 1980s where we went into the, the 20 range. So it's a little bit, but the trajectory is very similar. And so my concern here is that as the Fed turns its attention to unemployment, that they're so concerned with a spike in unemployment that they allow for the expansion of the money supply to continue. They lower rates. Okay. They brought them down by 50 basis points. Why did they do that? Well, we didn't have a meeting in August. So they were kind of a little bit behind the ball here, and they know it. And so they have this, they're walking a tightrope. Do we really try to, clamp down on inflation by holding rates high for long? Or do we lower rates in the hopes that we kind of head off this spike in inflation, which happens every single time that we lower rate? It's happened over and over again. So they're kind of walking this tightrope of, okay, we're being really careful here because as we do this, we might get into a period of what's called stagflation. And Larry's lived through it. I've lived through it when I was younger, and it is painful. You do not want to live through this. But that's exactly kind of the trajectory we're on, which is so frightening to us as investors, because how do you approach that? And why gold is doing so well right now, and why I believe Bitcoin will do well on the backside of this. I think we'll still have volatility in the meantime. And Larry, I know you've got some comments on that, but.
Well, yeah, I mean, look, Bitcoin's going to outperform gold, no doubt, over the longer term, but gold has always been more attuned to what the Fed's doing and inflation and monetary debasement, just because there are more gold holders in the world than Bitcoin holders, and they smell it early. And to your earlier question, Nat, of, have they really turned the printer back on? I mean, the answer is no, but they've taken a couple of steps in that direction. They said they were going to stop tightening. They did that when things blew out last fall, and they got scared that the 10-year was over 5%. So that 12 people within 10 days came back and said that the rate hike cycle is over. And now the rate cut cycle has started. And then they took QE and they cut it in half, actually more than half. They took it from
60 billion a month. Yeah, 60 billion a month down to 25 billion a month.
Down to 25, exactly. And we're just,
which is nothing. Let's just face it. That's nothing. That's just letting some of the treasuries roll off the books. They're not actually out there selling.
And, I predict that they're going to do probably 2 more rate cuts this year, and each one will probably be 50 bips. And the reason for that is that the interest expense is eating them alive, and they know it. And, they've crafted the narrative in the way they have to craft it to allow them to do what they have to do. I mean, as James said earlier, they've got 2 mandates. They've got the inflation mandate and they've got the unemployment mandate, but they actually have a third mandate. It's not specifically in the legislation, but they've mentioned it many, many times. And that is what we call functioning financial markets.
Yeah.
and we know that when the third mandate comes into play, like it did in March of 2020, when the bond market went no bid, that they step in with enormous liquidity. And so, I think what we're waiting for is until that event occurs. And, Powell's going to have his own, Mario Draghi-like moment. He's going to be a deer in the headlights, recognizing. And the clue will be, the dollar will fall sharply. Bitcoin will be screaming, gold will be screaming, and the bond market will start to fall. I mean, yields will go up, the prices of bonds will fall. And right now, the bond market is still somewhat tame. Everybody's doing the standard playbook, which is, the economy is going to slow down. Therefore, you want to own bonds because rates are going to be coming down in the future. So that's really the tell that both James and I are watching for. And you're starting to see it a little bit in the long end, right, James? I mean, in the 20 and the 30 year.
Yeah, I was going to say that. In fact, if you look at the yields are higher today on the long bonds than they were before the Fed cut rates by 50 basis points. What is that telling you? It's telling you that the expectations for long-term inflation are high, that the R square or the R star, the neutral rate is higher than people had expected. So that means that the Fed probably, in their own estimation, they're looking at 3% as their kind of their terminal rate, where the rates finish out on this cycle. Now, what does that mean? That means that there's likely there's definitely a risk of inflation spiking here, or else they wouldn't be holding it, at that. They wouldn't be holding their expectations at the end of next year at 3%, and the long bond is going to end up trading with a yield higher than that.
Yeah, I mean, I think what's going on now is that the world is waking up to what James and I have known for a long time, which is that they're trapped. They're absolutely trapped. And that's why you're seeing record high gold prices. And that's why you're seeing silver breaking out. And, gold smells it, and it knows what's coming. This is, as our friend Foss says, it's just math. There is no mathematical way out of this without them printing more money. I mean, if they don't print more money, the thing collapses.
Yeah, and the trapped, just to give some meat on the bone around that, right? So what we're talking about here is, look, if the government, if the Fed allows us somehow to drop into a recession, right? So right now we're spending $6.9 trillion annually, right? So, and if the CBO is that's what they're expecting. It's probably going to be more like 7 or 7.1 this year. But you figure that in an event that we have a sharp downturn, and Larry and I have talked about this before, you figure it's about 10 or 12% of a rise in expenditures. So now you're talking about let's call it an extra $1 trillion. And at the same time, you're going to have a drop in your tax revenues, and we're super financialized, right? So if you have a drop in the stock market goes down, companies not making as much money, they can't borrow as easily. We have expended, or the tax, the taxes that we collect are down by another, let's call it $1 trillion. Now you're talking about a $2 trillion deficit that becomes a $4 trillion deficit. That's trapped. So how do they deal with that? They can't deal with that. I mean, imagine the deficit going from 35.6 trillion as of probably tomorrow to 40 trillion in just in just a year. I mean, it's devastating, and they are trapped. They are going to try to avoid this.
Well, James, you brought up the risk of a recession, and this is actually a place where I get very confused because I try to watch all the macro analysis I can, and there are very intelligent people sort of on both sides of the spectrum, it seems. Some that are so certain that we're about to crash into a recession, unemployment is ticking up, we have all of these decelerating factors, and we will go into a recession. And others are on the complete opposite side, saying that we're going to have a melt up, we're going to avoid recession. It's very hard to see the signal through that noise. Can you help me?
Yeah. I mean, part of it is that part of the economy is in recession. You can see it, lower demographic is hurting. The credit card default rates are over 11% now. Right. The multiple of the cost to buy a home versus salaries is at all-time high.
Yeah.
The food inflation has just been insane. Yeah, and inflation is down, meaning it's decelerated, but we're still up, 2 or 3%, 4 or 5% from last year. I mean, look at your grocery bill, and so clearly there are pockets of recession. Both my kids just graduated college the last couple of years. They've been fortunate enough to get jobs, but most of their friends are struggling. It's not easy to find a job right now as a young professional coming into the workforce. That's an indication. I feel like it was in 1994 when I came out. I mean, it was a difficult economy to actually get a job in, unless you were going to Wall Street or, into some sort of emerging tech company. So, but the other side of it is exactly what you were saying before, which is that massive fiscal stimulus. And there's so much government spending, and a great percentage of the jobs that have been created in the last 2 years have been government jobs. And a large percentage of the jobs that were so-called created in the last couple of years have been revised out. So you had 1 million jobs taken out of the calculation last month, And so it's difficult for you to see exactly. But the point is, and what Larry and I are both kind of arguing for or explaining here, in our opinion, is that the government is trapped, and they're going to continue spending right through it and continue flooding the market with liquidity to avoid a sharp downturn. If we see one, it'll be a V recovery, just like it was in
Yeah.
2020, like Larry said, because of this.
Right.
I tend to be of the David Hunter camp that we're going to go into a melt up, just that they're going to continue to cut rates. And it's, this is the biggest stock and everything bubble in the history of the world. And it's going to, in my view, get bigger. But that doesn't mean that at some point it won't end.
Right.
And at some point there will be no buyers left, and it will end. And it will end very badly. And when it starts to break, I mean, they can't handle a lower market. And when the stock market starts to break, the negative wealth effect, et cetera, is going to flow through to everything. And as James points out, in 08 and 2000, when we had those big market downturns, the deficit grew between 6 and 10% because, tax receipts come down from the stock gains and costs and social costs go up. So, we're running a big 7%, 6-7%, GDP deficit right now. Imagine when that doubles in size, and then the bond market fails, and the only way to solve that is to go buy all the bonds. So, the Fed balance sheet goes from 7 trillion to, take 36 and add it to 7, right? I mean, there's really an unbelievable train wreck coming at some point. But until that time, hey, the band is playing on the Titanic and everything looks fine. Now, where's the iceberg? I don't know. I mean, I'll tell you one other macro data point that I think we should discuss, because to me, this actually drove gold in a big way. And I think it shocked a lot of people. Last month, or a couple of weeks ago, they reported last month's federal monthly deficit, right?
Yeah.
It was $380 billion in the month, 90 billion more than forecast. They were forecasting a deficit of 290 and they came in at 380. I mean, and I think that was, I don't know if you remember when that occurred, James, but gold and silver took off like rockets when that was announced. And, it's, I think, right. I mean, now it's, look, this stuff's lumpy, so you can't take that month times 12, right? But the point is, this is really out of control. I mean, this government is out of control. And you had a presidential debate where no questions were asked about the fiscal or economic, situation or balance sheet of the U.S. government. Nobody dares to go there. I mean, it's just not talked about. And yet, there's a train wreck coming, a big, big train wreck. I mean, I'm writing a book, and this is the topic of the book, right? That, you've got to actually hold assets which cannot be debased, because we know, based on prior history, there are, 50 years of example that if and when that train wreck occurs, it would look like the Great Depression in terms of a deflationary impulse. And then we know that the policy response would be, we are going to print whatever it takes. And the Fed balance sheet, just as the Fed balance sheet went from less than $1 trillion, 900 billion to, 3 trillion over 3 or 4 years with, QE and Bernanke. And then it went from 3 trillion to 9. It's come back to 7 under Powell. The next one's going to take the Fed balance sheet to 25. And at some point, the way, and I'm not suggesting hyperinflation is my base case, because it's not. It used to be a complete tail risk. I'm now thinking it's kind of a 10 or a 20% case. But the way that hyperinflation occurs is when people lose confidence in the currency and they say to themselves, just get me out of this currency. I know it's worthless.
Right.
And, if the Fed comes in and buys the entire U.S. government bond market, which arguably it would have to do if the stock market went down 40%, and the bond market sold off hard and interest rates went up a lot, you're on your way. I mean, and that's a 200,000 plus Bitcoin price going to $1 million, and that's a $5,000 an ounce gold price. So.
Well, hyperinflation is what, like 50+%?
Yes, as defined by Kagan, who's the leading authority on hyperinflation. He wrote a book on it in the 50s. I've got it. Talk about it in my book. It's 50% a month. Yeah. But even short of hyperinflation, we could have really high inflation a la South America.
Right. Well, I could also see it just manifesting in assets, which has been part of the problem, and why so many people feel left behind and unable to keep up with the cost of living, because assets are owned by such few people, which is why I think we need to get the word out, right, on Bitcoin, the easiest, most accessible asset that you could start to dollar cost average into. But I did want to bring up the election, because when I look at the price of homes, or when I go to the grocery store, or when I go out to eat, there are moments where I think, how does someone making an average salary survive right now? And you would think that if things are getting bad and people are really struggling and the economy, it tends to be the most important issue when it comes to time to vote, regardless of your politics, I don't understand how anyone would choose to go with the same essentially administration, regardless, again, whether you're a Democrat, Republican. If you are seeing and feeling all of this pain, you would maybe want something completely different. You would want a true change, maybe go in a different direction. The polls right now are as confusing as they were, I think, in 2016. And it seems like the election is neck and neck. But when I go out and I meet people, it's like their biggest pain point is the economy. So I want to get your take. Do you think the election is being truthfully reported in terms of where the polls at? Do you think that it matters? Does the outcome even matter? Is it good or bad for Bitcoin? I'm just curious what's going to happen with the election in your eyes and minds.
This is dangerous territory. James, you want to go first?
Well, first thing, it's dangerous territory, but okay. First thing, we've known that for a very long time, the last 2 election cycles, Trump's support has been underreported. I mean, that's just reality. Part of that, I believe, is the reason that, the mainstream media has villainized anybody who has been in support of Trump for the last 10 years, basically. And they've said, if you're in support of that, you're far right extremist, you're racist, you don't
Hitler.
care about women, you're sexist, and basically it's become this thing with the mainstream media that if you're for Trump, then you're an extremist. Now, what I believe has happened over the last 10 years is that the Democrats they've been captured by the far left, and they've moved that middle, that center, all the way to left. So if you're just a regular conservative and you were kind of in the middle before, you're now being seen as a far right extremist. So, but you're not, okay, so that's one thing. So that's always been underreported, at least for the time that Trump has been in this election conversation or had been president. So that's one. The second thing is, the mainstream media, it's been shown that these polls are oversampling Democrats. I mean, you oversample Democrats, you're going to get a higher Democratic number. Polymarket doesn't look like it's been accurate recently. It looks like it's also been kind of captured and being manipulated. I don't know how or why, but it doesn't foot with some of the more independent polls. Rasmussen, I've been watching, has Trump ahead solidly in many of those swing states, and that he's ahead in the overall vote. He may be ahead in the popular vote, which is just astounding. So that's all part of the confusion. I don't know what the real numbers are. Nobody really knows, but I can tell you this. Anecdotal evidence is that 4 years ago on my block here in Nevada, a swing state, 4 years ago, I look out my front window, there were 3 Biden signs. Boom, boom, boom. Okay. Now you flash forward to today. There are 0 Biden signs and there are 4 Trump signs. There was not 1 Trump sign in my entire neighborhood last year. Now on my block, there's 4. So, I mean, that's just indicative in a swing state that, to your point, Natalie, people are frustrated. They are struggling, and they want a change. And so, that's just anecdotal on the election, what I'm seeing. But as far as the election goes, we'll definitely go into that more. What are you seeing up there, Larry?
Well, it's not necessarily what I'm seeing here, but to Natalie's point about people being dissatisfied, I mean, I share James's view. I don't trust any of the polls. I don't think they're right. I think this, the way I view this election is pretty straightforward. I think Trump wins it, running away if it's a fair election. And I've got great concerns that it may not be a fair election. I've seen enough to know that probably the last one might not have been fair. And, that the other side existentially, does not want this guy to win. I mean, they've tried to kill him twice. And, they're going to do everything they possibly can to make sure he does not win this election. And, as long as you've got absentee ballots, as long as you've got all these illegal immigrants voting, you don't have I mean, explain to me why somebody doesn't have to show their driver's license or some form of ID in order to vote. I mean, there's so many things wrong with the electoral process, and we have electric ballots, not paper ballots. I mean, on and on and on. So, I'm very optimistic about how the country will choose, but like Stalin said, it really isn't the votes that matter; it's who counts the votes. So, I'm somewhat cynical in thinking that that maybe he won't be awarded the presidency even though he's won it.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Casa. It is so easy to set up your Bitcoin 3-key self-custody with Casa that I can show you pretty much the whole process in just 30 seconds. You're watching it right now. I recently switched to Casa for multi-sig collaborative custody and inheritance planning because of their enhanced non-KYC required privacy and the ease of this mobile app. Make sure to watch the tutorials and get your Casa plan for 10% off at casa.io/Natalie. Next up, Speed Lightning Wallet, one of the fastest growing Bitcoin wallets out there. Speed is a secure, low-cost way to send and receive Bitcoin and stablecoins instantly. The app is super simple to use and customers love it. Download Speed using the QR code on the screen or the link in my show notes. Use promo code CoinStories10 to get 5,000 free sats. Next up, CoinKite. You know how much I believe in self-custody, and when it comes to cold storage wallets, none are better than the Cold Card. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code CoinStories. And finally, are you ready to take control of your wealth? The Bitcoin Way is here to empower you. Learn how to take full self-custody and eliminate all counterparty risk. Set up your node and become the master of your own transactions and enjoy true autonomy. And upgrade your cybersecurity and protect your online privacy like I did. The Bitcoin Way specializes in personalized one-on-one training to help you become fully self-sovereign. Schedule a free consultation today. I've covered several elections during my tenure as a reporter, and I will say that in 2020, I would go to polling locations, and we did some stories on folks that would come in, mostly older folks who were going to vote for Trump, and they came in with their ballots or to vote in person, and they were told that they already voted. And they were extremely concerned, and they were there to cast their ballot, and they appeared very authentic and genuine, but they said they were turned away essentially. And whichever is the vote that comes into the system first is the one that counts. So if you try to vote twice, they told me it's always whichever was the first. And so it was very concerning because it does raise a lot of questions, and there have been more mail-in ballots than ever before. And I think there are already stories of, extra ballots being sent out, or, mistakes are made. People are human, even if you don't attribute it to something nefarious. It's a process that is very fragile and vulnerable to mistakes.
Yeah, and it comes down to a very small number of states. I mean, you wouldn't have to throw the whole thing. You'd have to throw Pennsylvania, Nevada, Wisconsin, a few swing states. So, but I mean, I pray that doesn't happen. But I think there's just no question Trump wins. I mean, that's.
But even if he doesn't, let's pretend that he doesn't win. Let's pretend that anecdotal evidence is wrong. That they just hate Trump enough that they're just going to continue voting for what we're doing here. Okay, so let's just pretend that that's the case. I don't think that Kamala gets, she doesn't get full Congress, so it's still split. So even if you get a Harris administration, there's a lot of problems with that, on many levels. But with the most important economic issues of, impacting the markets with things like an unrealized capital gains tax or an extremely onerous set of rules and regulations for smaller companies. Mm-hmm. I think that it's going to be very difficult for her to get things like that done because there is still there's still a split Congress. Likely. The other thing is, who knows? If she gets in, she may pack the Supreme Court, and then it's all bets are off. Then it means there pretty much is no election ever again. So, but I don't believe that that's going to happen. I don't believe that she would be able to get a full slate and a fully democratic government. So, and if that's the case, then we're going to get more of what we're getting, and we're probably going to get more spending. A massive amount of wasteful spending. Like right now, you've got some southeastern states that are literally underwater. Like they don't have power. They're struggling. They don't have water. They can't operate their hospitals, and they don't have electricity to hospitals. So, and we're not sending money there, but we're sending money overseas. Sending however many billions more were approved yesterday to go to Ukraine. That's just a demonstration of wasteful spending, more deficit spending that ultimately will cause inflation, yet it will not cause productivity here. And that's a problem, unless you count some of the back channel defense contracts that come out of Ukraine. But that's the problem.
I don't know if you guys saw that picture and if it riled you up, but it made me so angry when I saw the lawmakers autographing bombs that could likely kill innocent people. Again, I don't care your politics. I mean, that is so disgusting and wrong. Well, I want to raise something to you guys, because I mean, from all of the conversations that we've had together and in the Bitcoin space about the debt spiral and how unsustainable this is, it seems to me like no matter who gets into office, we have to print. We have to provide liquidity to the markets. It's the only way to keep this Ponzi scheme going. So does it really matter who gets in November?
In my view, it does. I think you're right. I think Kamala is more aggressive about UBI and spending money. And I think if you're really rooting for a monetary collapse, you want her to win, because she's going to bring it in quickly or quicker.
Bazooka and fire hoses of liquidity.
Yeah. I don't think Trump is necessarily a lot better, and he's dealt the same hand. And at the end of the day, the liquidity is going to have to come from the Federal Reserve. So it's really not even a political decision at the top. It's more when the Fed.
But it may be a healthier liquidity, because decreased regulation, increased, energy independence. And decreased wasteful spending are all good things. And that's what,
and there's no doubt Trump will be better than she will be on all those issues.
RFK Jr., that's what they're promising, you know? And if Elon comes in with them to cut wasteful spending in the executive branch.
The negative, obviously, of a Kamala win is just their view towards crypto. I mean, although I got to tell you, Trump really, in my view, really stepped on it when he decided to do his own coin. It's like, dude, can you please stop? Get your ego and your desire to make money out of the way. I mean, good God.
I know.
I was like, look, I'm gonna vote for him, but good God,
he's making a lot of mistakes that a lot of new people into crypto and Bitcoin make. But
whatever.
Well, it was still cool to see him make the Bitcoin transaction in New
York.
Absolutely.
He went to PubKey in New York City. That's a big deal. I wish I'd been there.
Yeah, it seems like he would be better for Bitcoin, but I actually think that all roads are going to lead to Bitcoin when it comes to the policymakers and lawmakers. Sure. Maybe one will just take a little bit longer. But okay, we can sort of wrap up the politics talk, although I will put a bow on it by saying that anecdotally here in Missouri, where I live, if you go to the really wealthy communities, I see Harris signs.
Really?
Wow. And when you go to the middle, lower income, all Trump, which I think is fascinating, because it's something that I think Kennedy talked about a lot. This idea that now the Democratic Party represents a lot of the elites. You see all the celebrities coming out, making their endorsements, the billionaires, but the average working people seem to be going in the other direction. And just a couple decades ago, it was totally reversed.
Yeah, now you have limousine liberals. That's what they are. It's incredible.
Yeah, it's wild.
That's actually David's term. He said the other day when we were talking, Larry, my partner in the Bitcoin Opportunity Fund, David Foley. He was describing the limousine liberals up there in Massachusetts, and I remember that having come from there. It's just it's gotten a lot worse for sure.
All right, well, let's talk a little bit more about Bitcoin. Give me some headwinds that are coming up that maybe people might not be aware of, and some tailwinds. Where do you see us going in the next 6 to 12 months? Because obviously, gold has been hitting a new all-time high and we have stocks at all-time highs, but Bitcoin has had trouble, I think, keeping up. I mean, it's doing well. It's doing a lot better in the last week or so, but I'm personally in the camp that I'm surprised we never hit six figures this year. I'm almost feeling a little bit bearish, like what's around the corner? Are we going back down even lower? Which is great, right, to stack, but where do you see it all going?
Go ahead, James.
Okay. First of all, great uncertainty is not great for markets. Markets hate uncertainty. And so with Bitcoin, you're definitely sensing some uncertainty here with, we saw the Nikkei was down almost 5% last night. It's like, are we going to have another, yen carry trade issue, or is liquidity actually being drawn out? Are we actually heading into a recession that we're going to have to stomach first? There's a ton of trading capital in Bitcoin, and they're moving around this thing, and it's not that big yet. So $1 trillion asset is nothing. It's just a fraction of a percent of the total investable assets in the world. When you have $900 trillion of investable assets in the world, and you've got an asset that's less than $1 trillion, yeah, it's going to get whipped around, especially when it's been the tip of the risk spear for so long. So that's one thing. But long term, and the reality is, and Sam did a great job with Lynn Alden on this, and in studying this, and it was in Bloomberg actually this weekend. They quoted the study that Bitcoin is highly correlated to the long term growth and liquidity. And so when you have money supply expanding over the long term, Bitcoin will follow that. It may not follow it week to week or even month to month, certainly not day to day, but it will follow it long term. And so if you just pull back and you just eliminate all the noise and you hear nothing else from this conversation but this, just remember that as Larry said, central banks are trapped. Sovereigns are trapped. They have no choice. We have so much debt. We have so much leverage in the world that we have no choice but to build on that leverage, expand on that leverage, expand on the money supply in order to keep the charade going. And Bitcoin will ultimately benefit from that even more than gold.
Natalie, I think it'd be helpful to give you some historical perspective. This reminds me very much of 2019 and 2020 when Bitcoin was kind of stuck in the 5s and 10K range, and gold was stuck at 1365, and gold broke out first, well before COVID happened or anything else, and then COVID happened, and then Bitcoin just came racing by, and so gold was up in that event. Gold was up, 50, 60, 70%. Bitcoin was up 300%. So to answer your question and to allay your concerns, the year is not over. And I'll say it here first. I think we'll see six figures this year, this calendar year. Yeah. And I think James would agree with us because he does a lot of good technical analysis. If you look at it, there's a bull flag forming with a downward slope. And what is it, James? 73?
Yeah, it's been forming for months now.
Right. And when it breaks 73, it's going to squirt to 100 like lickety split, don't you think?
Yeah. So if you pull up that flag, that's about right. And it's, once it gets through that $70,000 level, it's going to have, like right now, where the flag, the trajectory of it is about 66,000. If it breaks through there, it's kind of interesting here. All right. Can you all see this?
Yeah.
All right. So this has been a bull flag that's been forming for months here. Okay, this is the daily. So if you go to the weekly, it's easier to see. But this has been forming for this long. Here's the flagpole right here. After we had the ETFs approved and we had that sell off, which was a fake out. You had this flagpole created, and now you have lower highs and lower lows that continue as you consolidate through here, right? So now, as we've consolidated, we keep consolidating. You could see just this last week, we bounced right off that flag. I mean, it's just incredible. We bounced right off of it. And it's like a self-fulfilling prophecy that traders look at this and they watch this and they say, okay, it's not quite ready yet. And so now here we are this week, starting today, we're down, But once it breaks through this level, which is about 66,000, then the next level is the all-time high. And that all-time high is what, 72 and change?
73-ish, yeah.
Yeah,
73.
73,000. So once it breaks through that, then it's price discovery, and that's it. And then you're kind of off to the
flags typically fly at half mass, so you add another 20 points, 24 points to that, and you easily get to high 80s, low 90s, and it'll overshoot probably into the 100,000 range. So
you guys are feeling bullish.
Oh, absolutely. It's just relax. It's all coming our way. And I mean, and this is without something, without an accident, without something, quote unquote, breaking. I mean, I think there's a high probability that sometime in the next 18 months, something serious will break, like the stock market or whatever. And, the bazookas will come out.
Yeah. I mean, it happened back in 2019. We've talked about it before with the,
repo.
The repo spike. Well,
Exactly.
The repo spike. I mean, it was just, you look back at it now, it's obvious, of course it's quarter end. You've got, the window dressing, you've got banks, hoarding capital or hoarding cash. You've got, the expansion of the amount of debt that the Treasury wanted to float. And then you've got the dollar issue overseas and international investors not able to buy as well. It was just a confluence of events. Was it a black swan? No, but it was kind of grayish, and it was painful. And then boom, the Fed just came right in with QE. You can see on the chart of the expansion of the money supply. It started back in 2019 in that fall.
Right.
Well,
that was when Trump was like tweeting at Powell, wasn't it?
Yeah.
Exactly.
I mean, you also had a mini break in March of 23, when Silicon Valley Bank failed. Right? I mean, it's the same thing, but they managed to put that one back in the can as they always do. Look, it's a cat and mouse game with the Fed, but they're losing. They're going to go down. The currency is going to be massively debased, massively, and when it's all over, there won't be a Federal Reserve anymore, and that'll be a very good thing.
Well, this reminds me of what you said in a previous show we did, Larry, where you articulated that you believe there's one big print left in them. They won't be able to do the type of QE they did before after that. Do you still believe that?
I still believe that. Yeah. I mean, I think they'll keep cutting rates. They'll try and keep things going. They'll try and keep the market up. And, it's like they've got the plates spinning and they can keep them spinning as long as possible. But I mean, this is where I really think David Hunter is brilliant on this. I kind of share his view that at some point a plate is going to drop. They're going to be too many things, and that'll lead to the market rolling over, stock market, and that's a big negative liquidity event, right? A lot of money goes to money heaven when the stock market goes down 40%. Everybody feels like they're not as rich. The economy starts to slow. People start to do layoffs, and just one thing leads to another. And initially the impulse will be what's going on right now, which is you buy the shorter term bonds because you get a decent yield. But as even James pointed out recently, the long bond has actually been going up. And so James has done much more forensics on this. But I think what he's discovered is that the demand the reason we've got so much short term debt is there's no demand for the long term debt. I mean, the suckers at the card table are the people who hold long term U.S. government debt, knowing it's going to be debased. And guess what? The suckers are getting up and they're walking away from the table. They're like, hey, I'm not going to do this anymore. Yeah, and so, and this, by the way, this is the exact same pattern that happens with emerging economies that go into debt crises. They get to the point where they have to fund all of their debt short term because nobody with half a brain would ever own the long term debt of a country that's broken and out of control. And that's where we're going. And what people don't see is they think, well, this is the world's reserve currency. We got the biggest military, as Joe Biden says. This is the United States of America. Well, guess what? You follow the same stupid policies that everybody else in these emerging countries has followed for the last 100 years. You're going to get the same results. Your currency is going to go to zero.
But see, this is where I think it gets a little bit confusing because obviously the dollar is so entrenched in this global system. And when you watch mainstream news, you hear of these, I don't know, geopolitical battles between us and China. Like China's the enemy. It's the up and coming superpower. but yet they're facing such economic weakness that they have to come in with their own money bazooka. But we're also kind of taught to be angry at them because we're purchasing all of their cheap goods and we're just going into debt for it. I think all of it's a little bit confusing. It seems like there's no one that's ready to take the baton, so to speak, because no one wants to fill up their treasuries with, say, yuan or another foreign currency. So doesn't that give us more?
You're right, Nat, in that all countries are running with fiat currency, and so they all have the same problem. And the Chinese made the mistake of kind of emulating us in terms of debt-based growth. They're not particularly popular, but what I will say is that a couple of the BRICS countries, have kind of seen the other side of this and said, oh, you know what? We prefer to save our money in neutral reserve assets. And that's part of why gold is going up. I mean, gold is going up on decreasing ETF demand. This isn't U.S. investors buying gold, except at Costco, which is doing record gold sales. This is the BRICS saying, you know what, we can't store our wealth in fiat in Western currencies anymore. The yen's no good, the dollar's no good, the euro's no good. We're going to trade between ourselves using our own currencies, and to the degree there's an imbalance, we're going to net settle in gold. And this is why. People don't understand this. I mean, gold is not priced in the right zip code. I mean, if not even close. I mean, I stole that from Luke Gromen. Not even close. I mean, if we were to go to a full backing of the gold that we have, assuming we have the gold, which we say we have, which I don't think we do, but if we were to go to a full backing, the math is such that, the way we were in 71, breaking the standard, gold would have to be at $80,000 an ounce. Gold's at $2,700 an ounce, $2,600 an ounce. Yeah. That's a big difference. That's a lot of zip codes from here to there. So, sure. So what we're seeing is something that, and this is why history books are what people have to read if they're thinking about investing. We're seeing something that has not happened in 100 years. Mm-hmm. Last time this happened was after World War I, where a ton of sovereign currencies got all messed up because everybody, spent way too much money fighting a stupid and pointless war. Kind of similar to what we did in the Middle East, by the way.
Right. And during that time in 1944, a bunch of powerful people got in the room and they decided what the global economy was going to look like and what was the dollar was going to be the underpinning currency. So with that, as we start to wrap up, I mean, do you have any concerns that Bitcoin will face political forces that are against it because they can't control it, and that when these crises accelerate and intensify and potentially the dollar is under threat, that they might turn against something like Bitcoin? I mean, we've seen presidents ban the private ownership of gold before.
I do. So. I'll let James go first because my stuff's pretty extreme.
Okay, so let's go back though. First, the question is who is they? Because one of the issues that we've seen over the past few years of decreasing demand internationally for U.S. bonds, and especially long-term treasuries, is that we did something monumentally stupid, like monumentally dumb, when we seized and froze and seized Russian assets and treasuries. That signaled to the world that if you're not a direct ally of the United States and you do something we don't agree with, we may just take your toys away from you. We literally take your money from you. Mm-hmm. And so that just signaled to the world to be careful about owning and trusting the government, U.S. government, and long-term treasuries. It was so monumentally stupid that might have been the biggest mistake that this administration has done.
We weaponized the dollar. Yeah.
Weaponized the treasury and the dollar. Yeah. It was so dumb, and it's going to be painful. So that's one reason that these sovereigns have turned to gold and have turned to, and BRICS in my opinion, isn't trying to start their own currency. They're just trying to figure a way out of having to own U.S. treasuries in order to make energy deals and to have cross-border trade. How can we do that? Well, one of the long-term solutions, gold is not a great solution for that. Gold-backed currencies is not a great solution to that, because it's very difficult for them to determine how much gold you actually had. Can you see President Xi and Putin allowing their operatives to go into their vaults to count up their gold and to test it to make sure? No, of course that's not going to happen. So what could they do that's different? Well, they could do it with Bitcoin. And, we've heard Russia kind of banging drums about, we'll accept cryptocurrency, we'll accept Bitcoin. We'll see how much that really comes to fruition and whether they're not out there mining or whatever they're doing. I think the evidence is strong that they're out there mining in Siberia. But, I think that long term, sure, the foreign countries and foreign sovereigns should be putting Bitcoin on their balance sheets. And this is the game theory. This is where it comes down to game theory and who they are. And if you're talking about the United States and worried about Bitcoin being a threat to the US dollar, it's not a threat to the dollar. It might just save it. And that's the whole point.
I agree with all that. But to address your issue of what they could do to mess us up, look, Roosevelt grabbed the gold in 33, devalued the dollar by 70%, overnight, and, used that as a way to start to get out of the Depression. This is existential for them. I mean, I could very easily see the, Save the American Dollar Act, which, says that if you own gold or Bitcoin, you got to report what you own, and that the taxes on owning those are now 75 or 80%. And, and even so far as, this is why I think it's okay to buy an ETF if you don't worry about this risk. But me personally, other than my IRAs, which I can't buy Bitcoin any other way, I think self-sovereignty is so important because, just as some countries in the past have said, well, our currency is shit, we're going to grab all the gold mines and refill our coffers. It would be very easy for the United States government to pass a law saying, you know what, let's just cash out everybody who's got a Bitcoin ETF. We'll send them dollars, and that Bitcoin will now belong to the government. Right. And,
just
and that, so you don't, oh, and by the way, you can be sure that the day after that happened, Bitcoin would go up 1,000%.
Yeah.
So,
right.
it really does go to, not your keys, not your coins. Right. And do I underestimate what these people do? Absolutely not. They've effed me at every single chance they've had for the last 40 years. And, they're evil and, they're psychopathic. And yeah, they'll do it. They'll do it if they can get enough people and they can somehow justify doing it.
It's interesting you say that, Larry, because I do think that there are some of us who think, is this too good to be true? I really want to believe the vision and that Bitcoin is going to these crazy prices like Michael Saylor, his base case or his bull case, but and the idea of borrowing against your Bitcoin and all that. But maybe it's my scarcity mindset from being an immigrant, my parents with the great financial crisis, and just seeing that the average person, something always slams in your face and you just have it harder and harder.
Well,
and
it is true, Natalie, and it's going to protect you. But here's the problem. Your society might be wrecked. You got to read the mandibles, right? If
I read it, yeah.
Right. So if the dollar fails, you're going to be really glad that you own things that can't be printed, silver, gold, Bitcoin. But, you're not going to really like the way the world looks, in that scenario. It's not going to be a pretty scenario. But probably what will happen is, countries will break up and new countries will emerge, and there'll be countries that, that have, rule of law and protect assets and protect citizens' rights. And, productive citizens will move there. And, look, none of us can foresee how this is going to unfold.
Right.
And I would prefer for it to unfold in a very balanced way where, as James says,
right,
the U.S. government embraces Bitcoin, puts it on its balance sheet, backs the dollar. That's all great and wonderful. The problem is, look at the jokers we've got in Washington, D.C. right now. What are the odds of that happening? It's going to take some really enlightened leadership.
And
it looked like
long
Kennedy.
Time. It's not going to happen
take
overnight.
some time.
Right.
Kennedy would do it, right? But, most of the others wouldn't. So
Kennedy would do it, but why would somebody like Pelosi do it when she could make $250 million on a senator's salary? Come on. It's just the system is working for them. Yeah.
Well, the thing that makes me optimistic is just knowing how slowly things do unwind. The doomsday scenarios don't often really play out. And one thing that I think about when I look at the evolution of the internet, right? And all the companies that did amazing, and people built real wealth if they were early in Google and Apple and Facebook. And I'm hoping that we're sort of that new class with this new asset, and Bitcoin will generate that wealth for us. And it's not like the government's trying to come in and seize people's Apple shares and their, big tech stocks and their magnificent
I
sevens.
completely agree with you, and I talk about that in the book. It's a very good analogy, Natalie, because it's based on networking and Metcalfe's law, how a network grows, the value grows geometrically. It's a perfect comparable. The difference is that Apple was providing a service, and this is providing a competing currency to the U.S., to the currency that the corrupt federal government has as their tool for subjugating the world and making the Nancy Pelosi's of the world rich. And so, so there's a political angle to it. But look, if we can get enough people to understand this, and if we can get young voters to reject the socialism and the Marxism and the stupid ideas that are being put forth by the left, then, there's a chance that, we could become Galt's Gulch. But,
yeah,
I say that, cautiously optimistic that's what'll happen. I don't want to go down the bad path, but I don't think ignoring the bad path is a realistic assessment of the risks.
Right. No, I agree with you. I think it's always great to weigh the risks that exist and make sure to protect yourself, including being self-sovereign and taking self-custody of your Bitcoin. In the worst case scenario, if you had to flee, you can actually do it with your wealth, with Bitcoin. Well, this has been a pleasure. I love chatting with both of you guys. Let's go around and just get some final thoughts.
Yeah, look, we talked about a lot of things that could be painful here, but ultimately, I'm an optimist on all of this. And I do believe, Natalie, that Bitcoin's going to save us, and it's going to save us personally. It's going to save the nation. The path to that, there may be some pain in between. There likely will be. But I'm an optimist, and that's why we started this hedge fund. That's why we've got the Bitcoin Opportunity Fund, because we believe in Bitcoin and the ecosystem. We're investing in it. I mean, I've essentially dedicated my career to, not essentially, I have dedicated my career to it now. That's how strongly I believe in it. It'd be easier to just go on Wall Street and go do some private equity or make a bunch of money, in the fiat system, because it rewards people for, kind of brainless behavior. But this is taking personal risk, and it's something that the further down the rabbit hole you go, the more you research it, the further you get away from the people who are around you. And so what you're feeling likely, Natalie, is that, am I crazy? Have I lost my mind that I really do believe in this? Am I just brainwashed with this Bitcoin thing? Or am I really seeing something that people around me just are not seeing? And I believe you are. And so ultimately, I'm an optimist on all of it, because, everybody who does their research on Bitcoin and truly does understand it, in my experience, comes across that chasm and says, oh my God, how did I not see this before? So,
yeah.
I would echo James's thoughts. I mean, I obviously painted the black, scenario just because I want people to be, eyes wide open and fully protect themselves. I too am very much an optimist. I mean, the technology is going to save us. I mean, the technology of the internet is breaking down the information control structure that the powers that be have had. And we finally got people like yourself and Joe Rogan and Tucker, and I mean, many, many others who, are challenging the mainstream narrative. And that's enormously powerful and is going to topple that narrative. And then, if you take that to the next step, this is money, with the same set of characteristics: distributed, free, fair, etc. And, I think these two things are going to save humanity. I would just suggest, though, that between here and there, keep your eyes wide open, because this is a fourth turning, and fourth turnings are, extreme. The last one, we killed 50 million people, it was World War II. The one before that was the Civil War, and the one before that was the American Revolution, each of which, the rules completely changed. And so, this is the case of the first will be last. The Stephen Schwartzmans will be, last, and James and Larry are going to be first, and that seems good. I'm good with that.
Yeah, hey, I'm right there with you. No, you're absolutely right. As Jeff Booth says, it's a paradigm shift. And when you think back on technological changes in the past, it's crazy to think of the people who lived through, the church was at the center of governance, or they thought that everything revolved around the earth. And I mean, these probably were very difficult changes to believe. And people want to stick with the old ways that they're comfortable with.
Yeah, look at how they tortured Galileo. I mean,
right.
It's tough. It's tough to put your head around something that changes all the rurules.
Right. Yeah.
This technology changes all the rules. The invention of digital scarcity will go down as being, as big as the invention of the printing press or fire or air flight. I mean, you name it. The telegraph. I mean, it's a big deal. It's a really big deal.
It really is. And I will say, just to close this out, I try to orange people wherever I go. I think you guys are the same. And I was flying back from a trip the other day, and I happened to sit down in an aisle where the person sitting next to me was an airplane pilot. And he saw my hat. It was one of the FOMO 21 hats, the Bitcoin Barbie hat that says Bitcoin. And he asked me about it. And so we start getting into it. And I eventually described Bitcoin as exactly what you just said. This is the greatest technological breakthrough and invention since the internet and the printing press and all of that. And he's very curious. He's very interested. And the plane takes off, and I opened up a book that I was finishing because I was going to interview the author, and it was Fiat Food. And he leans over and he says, "Oh, what are you reading?" And I said, "Oh, it's Fiat Food. It's about how inflation has destroyed our health and how Bitcoin's going to fix it." And he just turns to me and goes, "Oh, this is a cult, isn't it?"
He's kind of right.
But it's funny because, I mean, at the end of the day, I know that some of our vision may seem lofty or out there, but if you fix the money, it actually does address a lot of these issues, and it won't happen quickly or overnight, but the core problem is the money, and that's what you need to address. And so it was fun to kind of ask him questions like, if technology is supposed to make things cheaper, why are things like homes, the cost of living, getting more expensive? And his answer immediately was greed. Well, people are always greedy, right? And so it's fun going on these journeys with people because Bitcoin sends you down knowledge paths that I think none of us really expected. And so I hope to have many more millions of Bitcoiners, because we need to orange pill all of them.
Yeah, everyone will get there eventually.
Awesome.
For sure. All right. Well, thank you guys. I'll have all of your information and links, the Informationist newsletter. Larry, hopefully you'll come back on when you release this book. But thank you so much. It's been so great to see you and talk to both of you.
Matt. Good to see you. Natalie. Have a good wedding.
Thank you. Thank you, Natalie.
Thank you so much for checking out this episode of Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open. If you want to share feedback or guest suggestions, just reach out at natalie@talkingbitcoin.com. Make sure you're subscribed to the show and check out my free newsletter, nataliebrunel.substack.com. I'll see you next time.